Gold is now the world's #2 reserve currency, displacing the euro and increasingly challenging the US dollar. Central banks are bullish on the yellow metal, spending enough to raise an army in pursuit of larger stockpiles. The gold buying spree is cited by analysts around the world as one of the structural pillars of gold prices. But is this trend expected to continue? And for what purpose are central banks continuing to buy gold? If you value unique insights about precious metals and the markets that move them, then this channel is for you. Subscribing is the best way to ensure we keep making videos and we never have to put ads on them. Thank you for your support. Central banks have been amassing a gold hoard that would make a dragon jealous. They are the world's most zealous buyers of gold and have been for some time. Their current reserves are approaching levels that were last seen in 1965, when the world was still bound by the Bretton Woods Agreement and lived the gold standard. But it's only recently the public has been interested in what central banks are doing with gold. Between 2011 and 2020, gold was out of favor, stuck in a bear market, and largely ignored. But with time, all that's old is new again, and gold prices once again have snagged the attention of the mainstream media, who found that gold prices are making their headlines look extra shiny. But even during the bear market, central banks have been net buyers of gold. For 15 years, central banks have quietly purchased, regardless of price. The change in bank policy was sparked by the recklessness that brought about the global financial crisis in 2008 and the Band-Aid approach to solving it of quantitative easing. In the last 3 years, central banks have bought over 1,000 tons per year, which is a tremendous amount of gold. The average between 2010 and 2021 was about 480 tons. Two things are clear. First, the policy of buying gold and stacking it like Legos in high security vaults is not new. Second, the pace more than doubled in 2022. It seems in both instances where banks began buying more gold that geopolitical instability and economic risk generated an increased appetite amongst global bankers for assets that carry no counterparty risk. That begs the questions that all gold investors should be asking. Why so much gold? What are they doing with it? And when will they stop? Let's address that last question first, because that might be the most immediately important to our retail investors. It's common knowledge that central banks buying gold at any and all prices have been cited as one of the foundations for the current gold bull market. This price rally could find itself stalling out early if central banks suddenly and unexpectedly decided they had hit their goals and were closing their wallets. The recent central bank gold reserve survey released by the World Gold Council gives us a little insight regarding the attitudes of prominent figures in central banking. Now, surveys have their flaws, but this one at least gives a little insight about the way central banks think about gold, and that's better than flying in the dark. So what did we learn? Well, we found that 76% of respondents said they think gold will hold a moderately or significantly higher share of total reserves in 5 years. That's a big number. And when this question was asked last year, only 69% agreed, which tells us these attitudes are growing. And over the next 12 months, 95% of respondents said they believe their official gold reserves will continue to grow, up from 81% last year. Short-term forecasting is a bit more accurate, so this tells us something important. Almost all central bankers expect their banks to continue to accumulate gold, meaning the support from these powerhouse institutions isn't getting a rug pull just yet. We're probably clear for the next year. There's less optimism when we're talking about the US dollar, however. Survey says that it's expected to remain the dominant global reserve currency for now, But foreign reserves of the dollar have been in a gradual decline, and that trend is expected to continue by 73% of the respondents. That brings us to answer the question about why central bankers are investing in gold now. Why the accumulation? There are obvious reasons. Gold's performance during upheaval, its value as an inflation hedge, its use as valuable collateral. But it also has no default risk, something that even the most trusted currency in the world carries. This year, the US lost its last AAA credit rating from Moody's. Credit ratings for countries are just like the credit scores we get as individuals, only fine-tuned for governments and corporations. The more reliable a government, the better the rating, the cheaper it is for them to borrow. That's the benefit to a government that wants to borrow, but it also tells the lender how much risk they should expect. A central bank is going to balance risk, and if the risk profile of the dollar goes up, that means they'll need to offset that with other assets. This is especially true if they're thinking that the risk might increase over time, and it doesn't look like the US government has figured out a path to dealing with our debt sustainably. And on top of that, the long-held guarantee that the United States would support a strong dollar seems to be coming to an end under this administration. A weaker dollar and higher inflation means that the value of the dollar as a reserve asset would be expected to decline. As a central bank, you wouldn't want to store value in an asset you think will depreciate, would you? That said, there aren't a lot of viable alternatives to the US dollar. And that's where gold comes in. A central bank could invest more heavily in euros, the yuan, or the yen. But those currencies all have default risk too, and they also can depreciate as they are all fiat currencies prone to inflation as well. But as the dollar weakens, gold's value increases. Part of the reason gold is now the world's number 2 reserve asset is because of the 15 years of accumulation. But it's also because gold's value has increased. We know the reasons central banks are buying gold are both varied and compelling. There's no visible end in sight to their consumption. If anything, it seems when governments cross certain lines and print money endlessly, banks crave even more gold. If you're an investor wondering if we should continue to count on these deep-pocketed organizations to support a high floor for gold prices, the answer for now is a cautious yes. And that's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.